Well, as market operators, we must always pay attention to such situations because the losses are not insignificant. I guess that, the real question is whether this is an isolated incident or there is something that is, broader than that. And at the moment, it seems to be very contained. So I would, at the moment, not be so much worried about market implications because it seems to be a very specific story to these hedge funds.
I mean, it will have some implications, one imagines, for the banks involved, and perhaps casts a little bit of a shadow on this idea that the financials are going to be back to paying healthy dividends fairly shortly.
Well, the question is whether it is, again, is something that is specific or is something broader that affects the entire system. If we go back to the crisis of 2008 and 2009, it starts with some banks warning about, liquidating hedge funds and taking losses. But then, you found that, it was not just one, it was quite a few of them, and that have started to affect the entire financial system. I wouldn't also be worried about, the dividends for the entire financial system out of a very specific story. And I would also say that, as a part of a recovery, you are bound to see still some issues that are either affecting some specific banks or some hedge funds or some companies. So at the moment, I would say that this is within what is expected, but we must monitor such situations.
But a large number of hedge funds fail every single year. We know that beneath the cream at the top, Francesco, there are a whole host of them that have tried their hand for a couple of years. They'll either run out of good ideas or basically lose money on their good ideas that they can't hold long enough. Anyway, they fail regularly. Why should this translate into losses in investment banks like we potentially are seeing at the likes of Nomura and Credit Suisse? Unless, and this is where it could be a bigger problem, Francesco, unless there is once again an endemic problem like we saw in 1999 and in 2007 with the risk management models at these investment banks who are just ignoring what their risk managers are saying.
Yes, Steve, but the situation is very different from what it was back in 2007, 2008. Let's not forget that was Basel II. Basel II was saying, you companies know best risk, you should be evaluating risk and should put some tier 1 capital according to what you think is appropriate. That's gone. This is a very different environment in terms of monitoring and regulations. So I would say that, we must trust that at least some lessons have been learned since 2007 and 2008. My point is that, really, we are talking about, an enormous amount of money being thrown into the economy, into recovery. The amount of liquidity, has been, enormous. And all of a sudden, we start to see that there are significant losses that are taking place. But within the broader context, these are still quite contained number.